Welcome to another episode of Mazars COVID Talks, a podcast about pandemic resilience aimed at supporting business survival by directing organizations to resources and embedding a culture of preparedness. It is April 29th, and my name is Tashonda Hagerbrook. I'm a senior consultant in the organizational resilience practice here at Mazars USA.
Hi everyone, I'm Alisha I'm a senior manager out of our New Jersey office, and I work in our entrepreneurial business services and advisory group.
As your co-host, we want to welcome you. Today, we're going to explore the top considerations for the insurance industry in lieu of the current crisis with our good friend, Mike Friel. And Mike is a senior vice president and regional sales leader for AssuredPartners, a national full-service insurance agency with over 6,800 employees, where they take great pride in always doing what is in the best interest of the client and leading with integrity. So welcome, Mike. It's great to have you.
How's everybody doing? Yeah, thanks for having me. Really excited.
Wonderful. Going to have a great conversation here about the insurance industry, specifically, how coronavirus is impacting insurance, and we've not gotten to get into this yet. So we're excited to get into these, looking at the top considerations. So I'll start with it. My first question was how businesses should fall in line, because this is the question I'm getting from clients all the time. What should we be doing to, stay in the right direction in maintaining our insurance? So what should we be thinking about, Mike?
Excellent. Yeah, there's a lot of, I think we're going on week 7 or 8 now. So there's been a lot of changes to the situation. And originally, I know a lot of folks have already asked the questions, and there's been a lot of resources out there as it pertains to whether or not you should submit claims. AssuredPartners, we're recommending that you do submit the claim, regardless if there's no direct physical loss or if there's no cause of loss that would trigger coverage under the policy. We are recommending to our clients and prospects that you do submit the claim. And the reason for that is because the federal government could step in down the road. And we just want to make sure that folks are not reporting claims in a late manner, which could jeopardize coverage. So as of right now, that's our best recommendation. However, I will say that I would not expect claims to be covered at this time. And not to get on my soapbox, but we're not, there's been a lot of articles out there from CEOs and some top executives from insurance companies, which are concerned. This will be a multiple billion-dollar payout regardless in claims. It may not all be business interruption claims, but there's other things that we may touch on as far as like trade credit and pandemic insurance bonds, or surety, also known as. So those things are certainly going to be triggered under the policy, and there's a good chance that it's certainly going to be a disruptor regardless.
Mike, do you have any insight, in just thinking about these business interruption claims, and if the federal government were to step in, what that would look like, and how a business owner would calculate the amount that would be owed to them? Would it just be something that they would look to a certain period of time and lost revenue, or has there been any chat, or just based on how companies were filing, their business interruption claims in the past? Is there any insight or what they can expect should, something come out down the road on this?
The best recommendation for that would be just to continue to keep a paper trail of the lost revenue, however long, a company's either out of business or unable to operate at full capacity. We actually work closely with accountants, similar to you, Alisha, where, we'll ask to do or help complete a business interruption worksheet. A lot of folks are intimidated by this worksheet. However, we can basically use something similar to that to calculate, number one, what is the loss of income currently, and then also looking forward, because just because we're losing money now, if you're going to your favorite restaurant forever and ever and ever, and then all of a sudden they're closed down, well, you may go find a new favorite restaurant, just as an example. So there could be some consequences down the road as well that are certainly have to be factored in and taken into consideration.
Sure. And you also mentioned trade credit, and I think that that's a great point and something that maybe we can discuss for a few minutes. I see personally a lot of my manufacturing clients or distributors that they have trade credit in place. Typically we see that there's exclusions so that not every customer is covered under that. But I would be curious to get your thoughts as to if a company did not have a policy in place to cover their accounts receivable pre-pandemic, is there anything out there for them today? Are they able to now go and get this insurance to protect and collect on their open accounts receivable?
Great. Yeah. So essentially, for those of you who don't know, trade credit is account receivable insurance. The easiest way to understand it is slow pay or no pay. There's been, a few folks that have hit the newspaper, some companies that were unable to, they had to file for bankruptcy and things like that. Those policies are designed to protect the buyer. And I say this because technically under the policy, there is no exclusion for viruses or pandemics. So therefore, the trade credit insurance companies, they have full intent of paying out these claims. So right now, I would say good luck, unfortunately, trying to obtain trade credit just because there's so much uncertainty. Last week, we went to one of the top trade credit insurance for a retail. It was an apparel company, and they just unfortunately were not in a position to offer terms and conditions because of that. Just there's so much unknown out there, and they're trying to calculate how much of a loss this will end up being. So,
are there any limitations then? And I think you mentioned this, but I didn't fully catch it or understand. So if a company does have credit insurance, are there any limitations or exclusions then as it relates to this pandemic or other events that would preclude them from collecting today?
I can't say with certainty just without looking at the actual contract, but a majority of the trade credit insurance policies do not have these exclusions. So therefore, coverage should prevail in that situation. Yeah. And I know you deal with a lot of manufacturers. It's very common in that space. And in fact, trade credit, it's much bigger in Europe. But do you mind just talking through, some of the benefits to trade credit from an accounting perspective?
Yeah, I mean, to touch on it briefly, it's something that in the U.S. we don't see it so often. I know we were chatting yesterday, and I also deal with a lot of trucking companies, and none of my trucking companies have credit insurance, but it really comes into play when there's any uncertainty, and if you have customers that typically are slow pay, as you mentioned, and they push payment at, as far out as they can, or if there's any risk or uncertainty that you're not going to be able to collect, it really just gives you that extra level of assurance and gives us assurance on our end that we're not looking at, significant bad debts. And we're always, of course, looking to have an accurate picture and a good story to tell. And most times, we have reporting requirements to banks and management and shareholders, and, we have to share financials. And, those financial statements require us to have estimates and allowance for doubtful accounts being one of them. So having, insurance to cover your accounts receivable that's out there is something that gives us assurance and protects your financials, and, can give a business owner some assurance that cash flows, will come in, and there's some level of certainty there. We do see typically there could be, for various reasons, one or two customers that are excluded from the policy. But typically, it's insurance, and it protects your accounts receivable, and it's there for you to be able to collect should something happen and you're not able to go to the customer directly.
That's great. Actually, speaking of slow pay or no pay, I will say that each state is they actually are operating somewhat independently. What we're seeing is a lot of what New York is doing and New Jersey seem very similar. And the grace period is typically it's about 60 days. However, since this is such a fluid situation, they're continuing to reevaluate this. But right now, I would say on average between New York, New Jersey, Pennsylvania, Delaware, the surrounding states, we're looking at a 60-day grace period where insureds have the ability to delay or defer payment, I should say, for the 60 days. And that's specifically for commercial insurance. And then regarding personal insurance, that's a case by case as well, but we're normally seeing about 60 days as well on average.
Are there any penalties or interest with that deferral?
There is not. So, yeah.
Just think it will be good. I'm hoping that we are internally at Mazars USA, or that some affiliate organization that we could connect with is collecting data on this, because I think it's going to be so impactful where it may have been an option in certain sectors to have trade credit, have that insurance. Down the road after this, we're going to see in certain sectors it's not optional anymore, or there may be other rules and regulations that change around this. So it'll be really interesting to see, who was insured beforehand, how it's benefited them versus the losses to those who did not have that coverage.
Yeah, I think that's a really good point too. And just to kind of add to that and go back to the thought of, why say a manufacturer would have it maybe versus a service company, is that, when you think of it, I have a manufacturing client and they order, their raw material, their inputs from China. And it's there's a big cash flow gap there, because from the time that they receive the order, the request from their customer, then they have to order and request the inventory from overseas. Typically when it's overseas, they have to prepay for that inventory. By the time that inventory gets here and it's in its raw form, and then they have to incur additional costs to manufacture it and get it into its finished good form, and then deliver that to the client. And then, oh, by the way, that client is going to pay us in 60 days. We could be looking at a 6-month cash gap there. And while, in that particular situation, they actually try and collect, 50% upfront from the customer, there's still 50% that's out there and is out there for a 6-month period. And, there's always a risk with anybody who is, incurring time and money upfront to deliver their product or service, that could be lost if you don't have some sort of insurance to protect you from otherwise collecting that, should something happen with the customer and they're not able to come back and pay. And I think, Tashonda, we see that in our world too. Generally we're producing upfront. We're, a service provider, and we're delivering, something, and we're incurring all that time. And, while we also can, we'll try to put retainer bills and bill out front, some don't accept that, and we bill on delivery. And again, by the time you collect that, and if you collect that, it's a risk. And I think that's a really good point, that we are going to see many companies are likely going to look to get that insurance, in the future coming out of this, because I'm sure that there's going to be a lot of bad deaths, unfortunately, with companies who are not able to weather the storm, if you will.
Yeah. Mm-hmm. Say weather the storm, and I'm like, it's almost May. We're creeping up on hurricane season. It's just not that far away. So I think a month from now, if you are, still afloat, knock on wood, things are going to look very different. Our climate is going to look a lot different for the businesses that are either thriving or surviving, or
Yeah, I was going to say, I'm also curious about workers' comp. That's one of the largest line items always on any company's P&L, and it's directly related to payroll. And I think, in everything that's been going on over the past several weeks, every single company has been impacted. And, we see all these unemployment filings and claims, and with workers' comp being directly linked to payroll costs, I'm curious as to, how and what, are there any considerations there, and what are companies doing and what should they be doing or thinking about?
That's a great question. I mean, we've been getting a lot of this for those exact reasons. The number one thing, or I'd say the most common question is it covered? So is COVID covered under workers' compensation? And I'm going to give you a big maybe on that. The reason for it is because it comes down to what's considered compensable. So, workers' compensation is designed to cover occupational diseases that arise out of the course of employment. And therefore, typically it's a state by state, by the way. So ordinary diseases like the common flu are generally excluded. However, where we live, it's a little unique. I'm speaking for Alisha and myself. We're in New Jersey. However, New Jersey, New York, Pennsylvania, they all have separate rating bureaus as opposed to the National Council, that consists of 36 states. So every state's looking at this different, but I will say that a lot of folks are following the lead of the NCCI just because that's the greater majority. So for the biggest challenge is, where did that particular employee contract or pick up, the virus? Was it at the grocery store? Was it at work? How can you prove it? Things like that. I will say, any of our first responders or the folks on the front line, they obviously have they have a case to make. I actually had a good buddy of mine who's a fireman. He was transporting someone who had COVID. He was exposed with some of his other coworkers. So, that would be something where, yes, no questions asked, they filed, and that was covered by workers' compensation. So that's the number one. The first thing I like to say is it covered? Maybe. It just depends on, where it's actually picked up and if you can draw it back to the workplace. The second thing I'll tell you is just because everybody's doing this work from home or working remote, it's obviously changed the landscape of the amount of incidents that can happen in a workplace. Folks maybe not working at full capacity. So one thing that we're recommending is, I guess a few things. Number one is ask about pay-as-you-go or pay-as-you-owe. So as you incur payroll, you pay insurance premiums into the insurance company. A lot of carriers are willing to make either midterm or adjustments at renewal, as opposed to just laying out X amount of cash each month. So there's a little flexibility with that. And also, if in fact one of your employees has COVID and it's deemed to be a workers' compensation claim, those claims will no longer be held against or go against your experience modification factor, and that's essentially your report card. So if somebody has like a 1.0, I'd say that they're a B student. If you go below a 1.0 and you have a credit mod, we call it, then you're in the A's and you're, say, in the 90s. So you're paying 90% as if you were to open up a business tomorrow. So there's a lot of things that are floating around as far as how we're going to adjust moving forward. I'm very curious to see the impact from a workers' compensation standpoint, but workers' comp, the rates over the past 2 years, the rates have been going down between 5 and 6%, which is a good thing for employees. However, I wouldn't be surprised if if they use this as a correction in the marketplace, if you will. So there's going to be a lot more of that, and even the folks that are working from home. The folks that are working in an office, we encourage people to, you still have to practice social distancing. I spoke with an insured yesterday, and he was moving people around the warehouse and the factory to basically make sure that they're maintaining the proper distancing, and then the documentation's another thing. I can't stress the importance of that. Making sure that we're, I don't want to say over cleaning, but things are probably cleaner now than they've ever been. but making sure you have that documented. So if somebody says, hey, this happened on this date, well, you can go back to your records and say, well, we just cleaned this area and this is what we did on X day or at this time. So those would probably be our best practices, if you will. Actually, Alicia, can I ask you a question? This came up last week, and what would happen if you offer an employee an opportunity to come back to work, but they refuse to do so?
Yeah. So we're hearing a lot of this. So to just answer that question, I think, it's a legal question, and I've been encouraging every single one of my clients to speak to their attorney just to understand, simply when they're having conversations with employees who have been maybe furloughed or, out temporarily for their own personal reasons, or they were laid off, a month ago, not knowing that there was going to be some government assistance or what that would look like, whatever the case may be, just having a conversation with their attorney to understand that when they are having these conversations with their employees and, asking them to come back to work, what should they be responding to them, and, get a set of talking points, and just be educated as to what you can or cannot say, and, what is acceptable or not acceptable, because there's a real issue right now, and it's a big challenge for, many of the clients and companies that we deal with, because, there's a few things. At first, we were hearing about the FFCRA, and the FFCRA, which was it's similar to the FMLA rules, and it's specific to the coronavirus. That was the first program to come out. So that came out before the CARES Act. And basically, just like the FMLA, it was something that said that your employees can go out for a period of up to 12 weeks, and you have to hold their job and pay them for that 12-week period. It's broken out, 2 weeks for sick pay and then 10 weeks under the family leave. There were certain parameters that, they had to meet, and the amount that you were to pay them was capped. But to put it simply, if you either were infected with the virus yourself, or you were, advised to stay home and quarantine for a period of time by a doctor, you would qualify for this. And if you had a child at home that you had to care for because schools or daycares were closed, you would also qualify. So it did put a cap on the amount that you would pay out to those employees. And there is a tax credit that you would receive for up to the amount of that cap. However, you do have to hold their job, and you would, potentially, depending on the situation and the circumstances, have to bring somebody else in. And, you can't replace their job. So you would either have to bring in a temp or, have somebody else work overtime. So, we had a lot of questions and concern around that, because, if we're dealing with a distributor who has a bunch of people that are working in their warehouse, or even a warehousing company, depending on their workforce, there was a lot of concern that employees were going to take advantage of this and say, well, look, my kid is home. I'm going to stay home and take care of them. I'll see you in 12 weeks. And, the concerns we had then were, okay, well, we get a tax credit, but there's going to be additional costs incurred, and we have to figure out how to operate without these people and hold their job. And then, how do you really substantiate that? In the case, if you have two parents who are home, do you have to prove that, you have to stay home because your wife or your husband is working? And what does that really look like? And there's still questions being asked. So that was kind of phase one, but then phase two, there was the CARES Act. And, so when the CARES Act came out, I think the biggest thing there was this Paycheck Protection Program and the funding that was available there. And it was very enticing because there's a forgiveness component to it. But the whole intent of it was to bring back employees. This came out, late March, and at that point, many of our clients had already furloughed much of their workforce because they were either shut down entirely or were already significantly impacted by this, and not knowing, if there was going to be any relief available, naturally, you have to cut costs, and it's an unfortunate situation. But in order to, the alternative is that nobody has a job in 6 months because we're out of cash and we're not able to sustain operations. So many let their employees go or furloughed a good percentage of their workforce. And then when this came out, again, the intent was to bring employees back. But in addition to this, there were individual benefits and incentives, and part of that was unemployment benefits. So anyone who was receiving unemployment for, again, a limited period of time, but they were eligible to receive and are eligible to receive up to an additional $600 in unemployment benefits under this CARES Act. So what we're seeing and continue to see is that, again, depending on, your workforce, there are many, many individuals that are receiving more pay and collecting more today under unemployment than they would be if they were to go back to work. And under the Paycheck Protection Program, companies need to bring back workers to have their loan forgiven. So it's really a fight and a challenge. And it's not an easy one. And I'm not sure, to be honest, that this was really well thought through when they came out with this, because, we're hearing over and over again on a daily basis, well, I'm calling, Joe Smith and asking him to come back, but he's collecting more, that, he's receiving more from the government by being on unemployment than what he would receive if he's working. So there's no reason for these employees to want to come back, but then that's hurting the employer, because if they don't meet a certain payroll level and if they're not able to maintain headcount and wage levels, they don't get the forgiveness, and they could, potentially be penalized for then not using this money that they received for payroll costs. And it's really a challenge and a difficult situation. And, I think that's where, speaking to your attorney beforehand, I'm not an attorney and I cannot give legal advice, but, I'm inclined to say that, when you go in a normal situation to collect unemployment, you are supposed to prove that, you are actively looking for employment, and there are no opportunities out there for you. So I have to imagine that if companies are being proactive and know, how to respond to the pushback that they're getting, they can react, accordingly, and just be prepared rather than, calling or just letting the employee say, I'm not coming back because I'm making more today. Because I think that probably technically, if you're offering them their job back, I would imagine they shouldn't be then collecting on that unemployment. But again, I am not an attorney, and certainly not an employment attorney, but I think I know that it's a real problem today, and I definitely encourage, business owners to be prepared and just spend some time educating themselves on how to respond to this, because it's a real challenge and a real issue.
Yeah, and I think we might bring that back as a topic of focus at some point. What are businesses doing to get around this moral hazard of people saying, yeah, I'd rather not, I'll take advantage of this crisis availability unemployment, because we know in regular circumstances, for you to receive and maintain unemployment status and continue getting that support, you have to jump through a lot of hoops. And it seems to be that right now, to appease a lot of people who were laid off immediately as a response before we saw businesses taking advantage of the Paycheck Protection Program, those people, you're right, they don't want to come back to work. I have a good friend who, for her, it was more of, I would like to go back to work, but I'm a single parent and I don't have daycare, and I am a district manager for this retail organization. So in order for me to be able to do my job, I have to have daycare for my daughter. And they ended up deciding, after they had laid her off, she already applied for unemployment, they incentivized it by giving her a raise to come back, but everyone can't do that. So then what does this look like? I feel like there needs to be some level of oversight to help get the individual that's receiving unemployment in line with, the benefits of the PPP and how that is there now for organizations to keep people working. It's tough how you give out freebies and then people get very lazy, unfortunately.
Yeah, I mean, we're seeing and hearing that too, and having conversations of, can we remedy this or get over this hurdle by offering some sort of bonus or incentive pay to come back. But yeah, I mean, how practical is that? And is that really fair? I think it's something that we're hearing and having conversations about, but I think when you still look at it, there's a challenge. It's an issue and it needs to be revisited.
Yeah. Regarding the workers' compensation, I forgot to mention this before. If you have an employee that say they're on the manufacturing floor or working construction and out in the field, and if those folks are reassigned to a different capacity, maybe it's clerical, you bring them in-house to work in the office or whatever that may be. But if you take them from a higher hazard or a class code to a lower class code, you have the ability, depending on the state, but most of the states are agreeing to this, but you have the ability to reassign them to a lower class code just during this time period. It's not going to be for forever. However, throughout COVID and as things can get back on track. So it's just an FYI.
So I know we've covered a lot of different information, and I appreciate that last point as well, Mike. I hope that our listeners were taking notes because there was a lot in here for businesses and for individuals. And we will be having a part 2 with you, Mike, because, there's still so much to talk about concerning auto insurance and us really kind of diving more into the PPP and the impacts there. And getting into what is to come as far as what we could, I don't think we can give a prescription to businesses of what to do, but we are starting to take note of some failures and some misses or near misses here and some opportunities. Like you said, Alisha, one thing that we know now is there clearly wasn't enough thought put into how to manage and make sure there's proper oversight for these programs working together beforehand. And so maybe in our discussions, I just feel like there's opportunity for us to foresee some solutions. But we always like to close with a note on personal preparedness. And in talking with you yesterday, Mike, I was excited. One, because insurance, this is just a topic that impacts everyone. Not only on your work level and on the business side, but on the personal level. And so I was hoping we could get, a note on personal preparedness from you in that arena. But as well, if you wanted to share something that's more personal that you've been doing to kind of give back
Sure.
or stay sane.
Yeah. Are you trying to tell me that insurance isn't exciting?
Well, not by any means. I mean, right now it's one of the more exciting things. When you told me, hey, you should call and see if you can get a reduction on your premium because your car's not moving. I'm like, thank you. That's very exciting.
No, absolutely. I'm just messing around. I will say, so unfortunately, we're trying to, take this quarantine pretty seriously and not go out and, run the risk of exposing ourselves to everything going on. So we've been keeping the UPS and FedEx guy plenty busy, to say the least. And, just as a small appreciation for them running up and down our driveway, which we're on a hill too, to make it worse. And we're looking at like 5-6 packages a day. So we just thought at a minimum, we can just, throw the guy a few gift cards every once in a while just to show our appreciation and just say thank you for helping us get through this time. So
that's really great. I love that.
That is beautiful. Well, we will be coming together for a part 2 on insurance. But Mike, we thank you for joining us today. And
Thank you.
Thank you very much. This was great. Definitely much more to come on this and to speak about.
Excellent. Appreciate it. Well, everybody, yes, stay safe, and I look forward to part 2.
For more information on the topics discussed today, visit us at mazarsusa.com/COVID-19. That's MAZARsusa.com/COVID-19. Remember, all information shared on Mazars COVID Talks extends from reputable sources. The views expressed here are meant to serve as suggestive guidance based on the knowledge and expertise of the co-hosts and guests. Thank you.